The Rebel Capitalist Show.
I remember when I first got into investing, one of the first few books I read were the Market Wizards books.
Yeah, great book.
All those.
Yeah.
And I remember a lot of the guys, especially in the original book, came from a background of gambling, and more specifically blackjack.
Yeah.
And I thought that was really interesting, and it prompted me to go out and read Ed Thorpe's book, Beat the Dealer.
Yeah, that's a great book.
It is, and just really practice to get my mind in that mode of thinking. But do you think that's why so many of the OG guys and gals that were just so amazing at this game came from a background of gambling? Because it's training your mind to think in terms of risk reward instead of just trying to figure out which direction the price is going to go.
Yeah, I think that, and probably guys that are good at gambling, that can do it over time, like poker and, maybe poker craps and blackjack, where you can actually get odds that are not unreasonably against you.
Yeah.
I think they have some innate ability to weigh and come up with probabilities. Like, in cards, when you're playing poker, I'm not a poker player, but I watch it because I appreciate the whole risk management of what they do. They know the probabilities of what their outs are and things like that. So you can weigh, okay, what are my probabilities? What do I have to put up? In investing, we are always having to make up our own probabilities. What are the chances that this causes that? And if that happens, what do I think the chances are that this goes from here to there? What do I think the chance of the price of gold goes up $100? And if it does, XYZ that's on its butt might go up 25%. So I think it has something to do with being able to, you're making up the probabilities in the first place, but you can't lie to yourself, because if you do, it doesn't work, right? So I think maybe that's why some of these guys that are really gifted traders that we see and that successful even at trading, as contrasted to investing, I think that's why they're also good at that discipline.
Yeah, one thing I've learned as well from speaking to so many people in the general public just through the comments of my videos and then having the opportunity to speak to pros like yourself, it seems that amateurs tend to think in terms of certainties and the pros think in terms of probabilities.
Yeah, good point.
Yeah. And so another thing that I learned from the Market Wizards books is that everyone always talked about edge. You've got to have an edge. What's your edge? You've got to have, which is basically a mathematical edge. So if you have the law of large numbers, that you're bound to come out ahead. It's just like being the house or the casino, is that you're going to lose some hands here and there or some holes of the slot wheel, but over time you're going to win because you have that edge. So how important is that? And the reason I ask that is because in today's day and age, it seems like everyone has completely forgotten about why that's important. And they don't ask themselves, do I have an edge, or am I just following the herd? And does the herd really have an edge?
Well, that's a great point, a question. I think part of the way to think about that is looking at how the investment world has changed in the last, say, 40 years. When I first got into business in 1980, people that were still professionals in it, whether they're brokers or money managers, even though it was a small industry, had managed to navigate the 70s, which was especially 73-4, which was a devastatingly tough period in the financial markets. And they became quite good at figuring out, how the market might respond 2 moves in advance. And I was struck as I learned how things work, how, kind of far in advance the market discounted things, and it really did. And of course, the old saying, the market is a discounting mechanism, is true. But I think Warren Buffett's version of that, in the short run, the market is a voting machine. In the long run, it's a weighing machine. I think what's changed in the last 40 years is there's much more of daily activity is on the voting machine side, not the weighing machine. And I think a large a huge component of that is what Mike Green figured out about how passive investing dominates. And then in the ZERP world, ZERP and NERP world we live in, where people have turned, derivatives into structured products, whether we're selling option premium or the VIX or all that stuff. So I think the market has changed in that it doesn't really seem to discount things very far down the road. It more like reacts to today's news. So it's become harder, I think, for guys that are clever at figuring out where things might go and being able to read the tape when it's getting in sync, because of the change in the market. I was struck, I was at a grants conference maybe in 2018, and Stan Druckenmiller said he couldn't read the tape anymore as well. I mean, I'm bastardizing what he actually said, but because what he would look for and what I think lots of us used to do is start to see when something acts differently than it should, it catch your attention. Then you would look for corroboration. That doesn't really happen so well anymore. The noise factor is so high that the managing money has gotten incredibly difficult, and it's all kind of gravitated more towards momentum and large cap stuff. But again, because of this distortion caused by passive investing, largely, I think. So the whole investment business is totally different than it used to be, and for the time being, it doesn't seem like there's much of you don't gain much by figuring out things a couple moves in advance, because all you do is get trampled while you're waiting.
Yeah,
I kind of got off on a tangent there, but sorry.
No, this is great. I think it was in your interview with Mike. I actually wanted to bring that up when you and Grant were talking to him. I think one of you said, "Well, it's almost like the dumb money has become the smart money, and the smart money has become the dumb money type thing." So in this type of environment, I mean, is it even possible to have an edge, or is the herd right that just you might as well just throw your money in a S&P index fund and just dollar cost average and close your eyes?
Yeah, well, I think you can. I used to ask myself that all the time. What's my edge? What's my edge? Especially when I was running my short fund.
Yeah.
And sometimes it can simply be, well, I'm willing to be patient, or I'm pretty good at risk management, and so I can do this or that. And but these days, I think it's much harder to have an edge. I think what you almost have to do is try to figure out when your unpopular idea, assuming when we're talking about being contrarians, if your is starting to work. When I was running short money, I used to call, okay, I got a thesis. My thesis is this will happen and that'll happen, and then they'll realize that they've got double booking and the orders will come in and blah blah. I'd have a theory about what was going to, and then when I would start to see it play out, I would get bigger. And I haven't done that so much on the long side. Because the difference is, you can get yourself in a position for capital gains, which makes trading less interesting. But I think that's one of the things I think that you can do, or maybe you can have an edge if you say to yourself, okay, I've got these positions right now, they're not really working. I mean, because when things are working, what do you need to talk about, right? But when we're in new ideas or we're trying to go in a different direction, things oftentimes don't work, and you have to figure out, am I just early? Am I wrong? Why am I early? Why doesn't anyone else? And you're asking yourself all those questions. And so I think if you can find a way to start to see the corroboration, again, it's harder because it's harder to read the tape, as I just noted, what Stan said. But I think that's about the closest thing you can have to an edge, is to know that you understand how to beef up your positions when it seems like it's finally kind of coming your way.
Do you think that it would be easier to have an edge if you were willing to invest outside the United States? I mean, as an example, I was talking to Jim Rogers a couple nights ago, and we were talking about Turkey, and he said that was something that he had just put on his radar, and he was going to start researching it heavily because he was very, very interested because of the all the chaos they've had there, kind of the blood in the street, so to speak.
Yeah, again, it's just, I don't know that a willingness to look will help for sure. And Jim is particularly good at finding these bombed out situations, going in and buying some of the things that he likes, and then sitting and waiting. And he's been doing it long enough that he's always got a book. I'm assuming, I never asked him this exact question, but he's always got a book of seeds he planted a long time ago, and they're starting to work. Like, and when Grant and I interviewed him, he was talking about Chinese wine stocks, and shortly thereafter they got lit up, So I think, again, that's sort of the contrarian. He's looking at it because he thinks, okay, things are as bad as they can be, prices are as low as they're going to go, and if I get in there, as that all starts to change, it'll start to work. So let's say you did that, you'd have to go in there and say, okay, I'm going to put a certain amount on now, and if it looks like my idea that other people are recognizing this start to come join you, you can beef it up. One of the things that was something that took me a long time to learn, coming initially out of the sort of the value school, was you can't blindly average down. If you have a small position or a small concentration of something, you can average down up to a point, but at some point you got to stop, and you can only average up, because otherwise you can average yourself all the way down to a really bad place, right? And so I think when you're taking things like Jim does and they're getting really unpopular, then I think you have to keep the amount of that, each one of those you have in your portfolio, small enough that they can't crush you if you're extra early. You know what I mean?
Yeah, absolutely.